Welcome to my YouTube channel. My name is Phil Grande, and welcome to the unfolding of the stock market crash. Everything that the Federal Reserve is doing right now, all it's doing is it's expanding the size of the bubble, and it's just extending the ETF when the bubble is going to collapse, the estimated time. I think we're going to see it before the fall, but most likely the fall. And I'll tell you why. First of all, what's going on is this very fake narrative that's telling us we have this explosive economy, which is ridiculous. Because all it's doing is if you stop people spending for a year, they're not spending and they have to stay inside their house. When you open up the door and they all come out at the same time, of course it's going to look like an explosive economy. But let's wait 6 months. Let's wait 3 months. In other words, if you look before the crash, the pandemic crash, 2020, February, the economy was only growing 2.8%. Since 2008, it's been 1.6%. Now, all of a sudden, people aren't spending at all. Now they're spending because they've been cooped up. Of course, you're going to have this expansion. But that's what's transitory, not the inflation. The inflation isn't transitory because what are they doing? They're turning around and printing like crazy all this money. And when you print this money for the purpose of trying to move the stock market higher, basically what they're saying is let's take and print more money, spend more money, and we'll get rid of productivity. This is their idea. Get rid of productivity. This is what they've done. They don't care about productivity anymore. This is what's going to bring the biggest crash in the world. So they're spending more money than the goods we produce, which means the same amount of money is all running around trying to buy this one Gatorade. So if I have a $500,000 or $1 million, then I can go to $2 million, and that's all, because I'm not producing. I still have one bottle of Gatorade. Boy, that's an explosive market. Look at our economy. It's growing. That's a bunch of BS. So let's take a look at this in a few months. We'll see. So in the meantime, what's happening is they're using this excuse that the inflation is transitory. And you look at the 10-year Treasury yield, and it's dropped from 1.72 to 1.44. And they're saying, look at that. If there was inflation, those yields would be going up, not down. That's a bunch of BS. They're manipulating the yield, the 10-year Treasury yield. And if you don't think that's true, then go look up what Jamie Dimon did with a whole group of banks. They got together, Deutsche Bank, all the top banks, and they went in and rigged the LIBOR rate. Remember that? They rigged the LIBOR rate, which means mortgages and derivatives, everything's tied to the LIBOR rate. And they were able to go in and rig it. After he did that in 2003, and he got caught in 2006, something like that. Then he went in and he rigged the fixed rate on the euro, because he was going to buy $105 million worth of the euro. So he waited till the exchange was about an hour, 10 minutes before the exchange closed, and he had his top traders go in and rig the fixed, I think it's the WMT euro rate. They do this all the time. So to come out and say, oh, the 10-year Treasury yield's going down. Well, that doesn't make sense. When yesterday, the inflation rate came in 50% more than they estimated, for God's sakes. So how could the 10-year Treasury yield be going down when the inflation comes in 50% hotter than what they expected? It's all BS. All BS. So they don't even know that they're contradicting themselves. Listen to these cuts. This was on the same TV show, minutes apart. Play the cuts.
I think our collective view here is that what we're seeing by way of inflation and price pressure is more transitory than it is permanent.
Huh. We're discussing now a cyclical rise in goods prices. And is it lasting a quarter, 2 quarters, or maybe 2 years? And I think this is going to be longer lasting, therefore not transitory.
So there you go. You got the one guy saying it's transitory, and you got the other guy saying it's not. That's why I don't trust any of them. The 10-year Treasury yield was always the darling. The 10-year Treasury yield was the one thing you could look at. It was pure, and you could say, how's the market doing? How's the economy doing? If the Treasury yields kept going up, the economy was doing well. If the Treasury yield was going down, not doing well. Now the Treasury yield's going down. They're manipulating it down, and they're telling us the economy's doing well. What? What are you, nuts? So that's why I depend on my charts to tell me when to buy, when to sell. Let me show you something interesting. Remember what they've done. Remember, it was the banks that were doing really, really well, right? The banks were doing well. Now look what's happened. The banks were going up. Now they're collapsing. Look at this. The banks are collapsing. Wait a minute. They were the leaders just a few weeks ago. And now what's leading is the big tech. Look at Facebook. They're leading. Look at eBay. They're leading. Look at this. So you got the regional banks going down, and you got Facebook, and you got eBay going up. Wait a minute. Just a few weeks ago it was the opposite. Now why is that happening? Because they're manipulating the 10-year Treasury yield so that the big tech stocks, including your Google and Amazon, the rest of them, all going up. They want those to go up. What manipulation? So that's why I love my color-coded chart, because I know exactly when to buy when it's green and when not to buy when it's red. Nobody else has it. It's patent. But here's my point. When you see stuff like this happening, it's telling you you're getting closer and closer to the crash. It's just being expanded, the bubble, inflated more, and the ETA is just being pushed out longer. Look, I've been doing this for a very long time, 51 years. I've been on this earth 75, 51 years. I've seen this before. I saw this right before Enron collapsed. Same thing. They start to manipulate everything because they have to create. They got to create a narrative to get people to buy stocks. Because the one reason, I'll finish with this, the reason the wealthy, the guys who run the Federal Reserve, the wealthiest people in our Congress are rigging everything because they want to make money. And they want to keep pushing the stock market up. And as long as they keep pushing inflation, that's going to push their other assets, their diamonds, their artwork, their real estate, and their copper and all their assets. And that's what they're doing. They're trying to push those asset prices up as long as they can to create more wealth for themselves. While they're doing that, they're killing Main Street. They're killing the worker because he can't get his wages up. I'll continue with this next week. Why don't you do this? Join my gang, Phil's gang, free for 10 days. And please do me a favor. Hit like and subscribe and tell your friends about this and listen to my radio show on my YouTube channel. But we are getting closer to the crash. If anybody says we're not having a crash, what are you, nuts? See you on the charts. Watch those yields.